Hello traders, Gary Wagner here, just before 1:30 in Honolulu, 7:30 in New York on Wednesday, 25th day of August 2021, and this is the daily report for gold and silver. We did have a moderate to sharp decline in gold prices, with intraday lows taking prices below the 50-day moving average, and we currently have gold trading in Australia just above that price point. On yesterday's show, we began to discuss a strategy, and although we do not have an official trade alert issued, we wanted to address those subscribers that wish to position themselves prior to Chairman Powell's speech on Friday. To that end, today's show will attempt to give that a little bit more clarity in terms of stop placement, because yesterday we spoke about putting it below the 50-day moving average, and we realized that that's not enough data for our subscribers to go with, so we'll be much more specific when we look at our chart section. But first, to the price board. Gold sustained a sharp sell-off, giving up $15.80 in trading today, currently fixed at $1,792.70, approximately at the 50-day moving average. We'll fill in those details when we look at some charts. While the dollar was stronger during part of the session, it did close lower on the day, losing approximately 0.1% at 92.82. But it was the Nasdaq and Standard & Poor's 500 moving to new record highs that really ignited risk on appetite and took away some of the luster of gold. Currently, we have the Nasdaq Composite at 15,041.8585, and we also have the Standard & Poor's 500 up about 0.2% at 44.96. Although we have not sent out an official trade alert, yesterday I spoke about our current assessment of the market and what traders might want to do if they wish to position themselves in gold or silver prior to Powell's speech on Friday. And I did say to put our stops below the 50-day moving average. What I didn't clarify is how far below or where to actually put it. And I want to give a little bit more clarity to that today. One, we have to acknowledge that any time you have an FOMC meeting or you're expecting any kind of news or speech by major Fed members, and there is no one more major than Chairman Powell himself, you have to expect increased volatility. I believe the gold pricing should hold and needs to hold, if it's going to have any kind of upward momentum, a price point above the 50-day moving average. It's right at that point right now. In terms of how far below you would want to put your stop is really going to be dependent on the level of risk you're willing to expose yourself, because you're going to get swings in the market. At minimum, you want to acknowledge these lows that came in last week, and especially the low on Monday. The low on Monday came in just below 1780, so 1775 would be a logical place to look to put the stop, but you certainly don't want to have a tight stop going into Powell's speech. That being said, what can we make of today's activity? Well, as we spoke about, we had a surge in terms of pricing on Monday. It took gold prices above the 50-day moving average, but as we spoke about yesterday, it had an intraday high just at the 100-day moving average, pretty much assuring us that that was at least a level of resistance. The other thing that we spoke about was the 200-day moving average, and what we would like to see is a move above, on a closing basis, both the 100 and 200, because then we would see those price points potentially become a level of support rather than a level of resistance. They obviously currently remain a resistance area, and quite a major one. Just minutes ago, trading commenced in Australia. It is hard to see, but it is this single line right here. And what I have to acknowledge is the fact that it is opening in Australia above the 50-day moving average, ever so slightly. While it still could absolutely drift lower, my hope is that this will be a rough line in the sand. We obviously had intraday lows below that of where the market opened to where it closed today. in New York trading, it did maintain its price point above that key level that I strongly believe needs to be an area of support and not an area that gets violated on a closing basis. While gold got pretty battered, silver, for the most part, remained unscathed. Now, it did give up just over 0.1%. That is about a 3-cent decline, minimal decline, with the September contract currently fixed at $23.86.5. While gold had a sharp sell-off in trading today in New York, silver remained, in essence, unscathed. This is the daily candlestick that is the outcome of today's trading action. You can see that currently we've got a fix in Australia, and we have silver at $23.87. It's putting it up approximately 1 cent above the close in New York. As I said in yesterday's commentary, we would look to put a protective stop below $22.80. In terms of giving more detail to that, it depends on your risk aversion, but ultimately you would want it to be below the low that came in on the 20th. And at that particular price point, we had a low that was just above $22.75, and I believe that that is the area you would want to consider, $22.73, $22.74, but it has to be below a $22.80, as we spoke about yesterday. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.